Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about the cues for trade, the stocks and sectors in focus. And of course, we'll be getting all your stock-related queries answered by our expert on the show. But before we do all that, let's take a look at what the headlines are looking like this morning. Well, US futures trade with mild cuts. Wall Street was shut last night on account of President's Day. Asian markets trade mixed, while the SGX Nifty is indicating a mildly higher start for the Indian markets. Minda Corp says its acquisition of a 15.7% stake in Precall is only a financial investment and it will continue to be a minority shareholder in the auto parts maker with no special right. The company also says it will continue to explore all opportunities going ahead. And we analyze the hits and misses of the third quarter earnings season, and stocks in focus today are Vedanta and Asian Paints. Well, joining us this morning is Nirav Chheda of Nirmal Securities. Good morning, Nirav. Mildly positive cues coming in from SGX Nifty. We saw a 0.5% cut on the index yesterday. What would your strategy be like on the Nifty today?
Hi Nandita, good morning. So again, it is that phase in Nifty which is very frustrating for everyone, all the participants, where Nifty is not going anywhere. Same with the bank Nifty. It's in a range. There was a good chance in the last week to break that range about that 18,000 levels, but unfortunately on Friday some selling came in, and even yesterday, looking at the overall setup, looks like, we will continue this for another couple of days at least, where Nifty is making a flag kind of a formation with the upper band being around the 18,000 levels and the lower band around that 17,600, 17,550 levels. So that is where, Nifty is going. I believe Nifty's touched the upper band, and in the next couple of days, at least probably, in the coming days, it should go for the lower band. However, there are a host of supports on the lower end. So, it becomes very difficult to predict Nifty day in, day out from an intraday perspective. But yes, I do believe, that lower band will be hit sometime in this week. And, that is when one should be looking to buy good stocks and indices, around that 17,600, 650 odd levels. Bank Nifty similarly, 42,000 has been a strong resistance, and every time Bank Nifty moves there, you're going to see some selling coming in. It's also making a flag kind of a formation, and the lower band seems to be around that 40,000 odd level, so it can probably go to touch that levels. It did go down toward the 40,600 odd levels yesterday, and probably it will make a move towards that 40,000 level. So all in all, I believe, that lower band in both these indices should be hit, but it's not necessary it is hit today. So it's like a 2 or 3 day kind of a view where, once that lower band is hit, that is when you go ahead and buy. There are some pockets which are doing very well, and I believe they should continue to do well going forward, especially, that capital goods. They've given some terrific breakouts, and even IT, for that matter. IT,
Right.
After a long time, it has actually moved up. So, be selective in sectors and stocks while indices, let the indices break out or break down, and then probably,
Right,
get
Nirav.
into trade. Yeah.
Right. Nirav, hold that thought. We'll come back to you. But let's also bring on board Gautam Duggad of Motilal Oswal Financial Services to take stock of how the third quarter earnings season has panned out. In fact, it has just concluded. So let's take stock of what the big hits and misses were in the third quarter earnings season. Good morning, Gautam. Good to have you on the show. Well, what, according to you, was the big hit in the third quarter earnings season?
Hi, Nandika. Good morning. Thanks for having me. So third quarter earnings season was a bit muted. Things are decelerating across the sectors. The two exceptions were financials, which has continuously done well over the last 4 or 5 years. But the important highlight for this quarter was the resurgence of auto. Auto as a sector has come back after a long time. We have seen very strong performance. Earnings have beaten expectations, and more importantly, it has resulted in a significant earnings upgrade. So for Nifty auto companies, we have seen a 25% earnings upgrade. 5 out of 6 auto companies have seen an earnings upgrade in our coverage universe. As far as broader markets are concerned, that's where things are bleak. For our broader coverage universe, earnings were flat. We were expecting a growth of 8%. For Nifty, the growth was 11%. We were expecting about 14%, so that is in line. But for our coverage universe, if you exclude the Nifty companies, then there was a 18% earnings decline, which was worse than what we were expecting. We were expecting about 2-3% earnings decline. So across the board, there have been disappointments, largely led by commodities like metals, oil and gas, cement, which have seen a big earnings decline on a YY basis. Pharma earnings were flat. Consumer was also muted at about 10%, but that's largely led by names like ITC and Britannia. The other consumer names disappointed. There is a broad-based consumption slowdown, which is quite evident in the way numbers have come out for staples, discretionary, some of the two-wheeler names, durables. So consumption slowdown is a big negative highlight from this quarter, and autos comeback is a positive development. Financials, which is a large part of the earnings pool, continues to do well, and it has done well this quarter as well and has seen marginal earnings upgrade as well.
Right. Gautam, you spoke about autos and banking doing well. Any stocks that investors should keep on their radar after the third quarter earnings season?
Yeah. So, Nandita, on auto, we have preference towards names like M&M, Ashok Leyland, Bharat Forge, and even Motherson. As far as banks are concerned, our preference stays with ICICI and Axis on the private bank side, and SBI and BOB on the PSU bank side. We also like Bajaj Finance, which we had recently introduced in our model portfolio in January when we did our strategy preview. So that's the view as far as banks and auto are concerned.
Right. Gautam, any changes to the Nifty EPS estimates for FY24, given the fact that profits have moderated for India in this quarter, and the pain was clearly visible in the mid-cap companies, right? So going forward, how does FY24 and the coming quarter look like for you?
So, Nandita, going forward in the fourth quarter FY23, our expectations are about 11 to 12% earnings growth for Nifty. That's not changed materially. Our full year expectation is also 12% growth. First 9 months, we are already tracking 14%. So the run rate for 4Q is not very divergent from what we are already seeing in first 9 months. But remember that Nifty gives a very misleading picture because most of the companies in Nifty are segment leaders with great market share and profit share in their respective sectors. So it hides the pain to a large extent that is visible in the broader market. Plus, large part of Nifty's earnings, specifically financials, IT, even utilities to that extent, are not broadly reflective of the pain in the small cap and mid cap segment in the broader markets. As far as FY24 earnings are concerned, they're quite stable. We're expecting some rebound, marginal rebound in metals profits next year, and which is giving a slightly higher percentage growth for FY24 vis-a-vis FY23, because in FY23, the commodities earnings have fallen to a great extent. For example, metals profit have fallen from 75,000 crores to 25,000 crores, which we're expecting to go back to 50 in FY24. So it will look a very strong growth if you compare it with FY23, but on a slightly more normalized basis, on a 2-year basis, it is still down from the peak of FY22. We expect banking and auto to continue to do well in FY24 as well. And that's broadly what explains close to 20% earnings growth that we have built in for FY24 with an EPS of about 990 rupees. Our EPS for FY23 stands at about 810 rupees.
Right, banks will continue to do well, and metals may in fact stage a rebound in FY24. Lastly, Gautam, leave us with some mid and small cap picks from Motilal Oswal going forward.
So our preferred ideas, Nandita, in mid and small cap segment is, for example, in consumer discretionary, we like Jubilant FoodWorks, we like Trend, Metro, and now even Page, given the correction that we have seen. In the financial space, we like AU Finance, Angel, Chola. As I mentioned, in the mid cap space, we like Motherson and Ashok Leyland. So these are broadly some of the ideas that we like across our mid and small cap segment. Even APL, Apollo, Dalmia Cement, that's part of our model portfolio as well. But do remember that in mid and small cap, bottoms up investment is far more important, and then looking at it from a sectoral point of view.
Right, Gautam, thanks a lot for sharing those thoughts with us. It was a pleasure talking to you this morning. We look forward to having you again on the show sometime.
Thanks, Anita.
Thanks a lot. Getting back to Nirav then, Nirav, I want to bring your attention to Cipla. That stock was down somewhere around 6% on the back of regulatory concerns. We are also getting in queries this morning. Prabhu has written in and he wants to know whether this is the right time to buy Cipla for the long term. Stock down 6% yesterday. In fact, Indore plant got US FDA red flag, and then Goa plant was also under the US FDA radar. What do you expect this stock to do on the charts?
Yeah, see, Cipla along with Sun Pharma have been the two stocks in the pharma universe which have done very well in the past 1 year or so, while all others were lagging behind. I believe Cipla has made its high, at least from the near-term perspective. It can probably witness some more selling. A breakdown has come in around the 1030 odd levels. It can come down now towards that 900 to 880 levels, which will be a very good level to add positions from a medium term to long term perspective. The long term chart is still positive, so let it come down towards its support levels, and that is when probably you'll see this stock again, witnessing good demand, and from there, going up towards that 1250, 1300 levels in the near to medium term. Long term perspective, I believe you can definitely buy, but buy near the supports, and the target should be around the 1600, 1650 levels.
Right, so those are the levels to watch out for on Cipla. I also want to speak to you regarding Minda Corp. This stock has been in news after its take buy in pre-call. In yesterday's session, it was down around 0.5% or thereabouts, and on Friday as well, it was under pressure. And over the last 5 days, it has lost somewhere around 4% or so. How should one look at this counter now, Minda Corp?
Yeah, see, Minda Corp, the chart in the near term to medium term is actually sideways. The stock is in a range of about 250 on the upside and about 195 on the downside. That is what it is doing in the past 3 months. It's not breaking out or breaking down. Having said that, there's decent buying that is going on in the last 3-4 months. Good volumes have been seen. So this stock should break out. But yes, what should be done right now? I believe don't do much. If you want to trade, this is a good level to enter. You can keep a stop loss of around 192. For your longs, and just as it comes to 240, 250, book your profits. That is what you should be doing in the near term at this point of time. Bigger quantities can be bought only once 250 is broken. Once that is broken, I believe this stock will be headed towards the 320, 350 levels, and that too very soon with the overall profile of the stock.
Right, Nirav. Moving on to the IT basket. Now, this has been an outperformer, the IT pack. It has been an outperformer this year, given the fact that it saw a massive underperformance last year. We have a query from Vignesh, and he wants to know your thoughts on Happiest Minds and Tech Mahindra for the next 1 month. Is it the right time to average both the counters? Tech Mahindra, I think, has amassed gains to the tune of 13% over the last 5 sessions. In fact, even Happiest Minds was up somewhere around 6% or so in yesterday's session. Is this the time to average both of these?
Oh, definitely, yes. Happiest Minds for the longest period, probably, almost 2 years now, the stock is under selling pressure. The good thing here is, it has made a very good bottom kind of a formation in a near-term perspective. I believe this stock can come up towards 1050, 1100 odd levels. So do, average at current levels. It's also witnessed a breakout around that 885, 900 odd levels. So most definitely it is going to go up. Average it here and book profits around 1050, 1100 in that range. For Tech Mahindra, I believe, this stock can have much bigger targets. This stock can go up towards 1450, 1500 odd levels. The overall profile for this stock is very good. the one thing to note here is, the open interest. A lot of shorts were there in the system, and in the last 2 months, you're seeing a lot of short covering, especially during the rollovers in the expiry time. And I believe this stock has even broken out in the last week around that 1050 levels with very good volumes. So I believe this stock can move up quite significantly from current levels. So do average this stock as well. You can keep a stop loss of around 1070 for your longs, and hold on till 1400, 1450 comes in.
Right, you can average, look at averaging these stocks. Staying with the mid-cap IT basket, we also have a query from Rishi Ranjan, and he wants to know your thoughts on Persistent Systems. This stock was also up somewhere around 3% along with its peers. What would you advise investors to do with this one?
Beautiful pattern for this stock. I believe this stock is witnessing a rounding kind of a formation, and the breakout has also come in this week at around 4900 odd levels. This stock should probably, if everything goes well, this stock should probably give you 20-25% returns very soon. This type of patterns are very rare, and when this comes in, the buying that comes in post breakout is very significant. So definitely look to add positions here. You can keep a stop loss of 4900 for your longs, and at least 5600 to 5650. That is where the stock is headed to.
Right. The next query is coming in from Pawandeep Singh, and he wants to know your thoughts on Motherson Wiring. Now, a lot of brokerages are pretty positive on this counter and have predicted upside of somewhere around 20% on this one. What would you say? How is it poised on the charts?
Yeah, see, I do believe this stock is actually coming down, in the last three and a half months. The volume profile here is not very significant, and I generally look at volumes very closely. But at this point of time, the overall chart setup doesn't look that great, at least from a near-term perspective. So I'd like to avoid this counter at this point of time. Yes, if it gets a breakout around the 55, 56 odd levels, that is when I'd probably enter the stock, and then probably it can make a move towards 68, 70 odd levels. But until then, I'd be staying away from it.
Right, the next query is coming in on GSFC. Mohit Anand Bhatia has written in. He holds shares at 152 rupees a piece. He wants to know whether he can look at averaging at current price. If you look at GSFC, this stock has been up 5% over the last 5 days or so. Would you advise him to average it at current levels?
Yeah, see, for me, most of the PSU stocks in the last 1 year or so have witnessed very good volumes. They've not broken out, most of them, but the volumes that have been witnessed have been terrific, and it's very similar here for GSFC. It is just waiting for a big breakout, and once that comes in, you're going to see a huge rally in this particular stock. So I definitely think one should be averaging at current levels. It is making a flag kind of a formation in a longer term period, which is a good sign, and that flag breakout comes in at around 145 levels. So once that 145 levels is crossed above on a weekly setup, you will see this stock actually running up towards that 180, 200 levels. But it is a good level to average at current levels. You can keep a stop loss of 120. In the last 3 times, this stock has witnessed good support buying from 120 odd levels. So this is a very strong support zone. You can buy here and hold on for add more once 145 is broken above, and hold on till 175, 180 odd levels.
Right, it's a good time to average this counter. Moving on to the paints basket, Asian Paints is in focus this morning as it has signed an MOU with Gujarat government to set up a facility in Dahej. And we also have a query on Indigo Paints coming in from Abhilash. So looking at the paints basket, which one is looking better on the charts, Asian Paints versus Indigo Paints?
Um, See, looking at the paints basket, I don't think any paint counter should be bought from a near-term perspective. Why? Because most of them have witnessed a good rally in the past year or so. In the last 3 months, they're coming down. But the overall chart setup is not very great in the paints basket as a whole. A double top kind of a formation is seen in Asian paints, and there are chances this stock will be a laggard in the next couple of months or so as well. It can come down towards the 2500 to 2550 odd levels, and you can probably look to buy this stock at those levels where around that 2550 odd levels. A double top in this stock is not a very good sign. If this 2500 level is broken, you will see this counter going down further. So I'd be staying away from Asian paints at this point of time from a near term perspective. Yes, from a long term perspective, I start adding to at 2500 odd. For Indigo, it's a similar story, but not as bad as Asian paints. I believe Indigo is in a consolidation. With the upper band for this stock is around 2100 or so, and lower band around 1680, 1700. So it is coming down towards its lower band of 1700. You can look to add positions once it comes there. I don't see these paint stocks breaking out so soon. So, hold on till these stocks come down, buy at lower levels, and then you can get, good profits once all of them start to move up.
Right, so that was the call on paint stocks. Let's move on to some defense stocks. In Bharat Dynamics, this counter has been on a tear since last week. In fact, we've seen gains to the tune of 11% over the last 5 sessions. It has been inking MOUs last week at the Aero India show. Then yesterday there was an export order and was trading ex-dividend. How much more upside on Bharat Dynamics? Do you expect the counter to hit the 1000 level anytime soon?
See, the overall chart setup is positive. There's no doubt about it. But having said that, every time it has come to 960 odd levels, 965 levels in the past 2 months, it has witnessed selling. And it has again touched, it is coming towards those levels now. So, if you want to buy for that 50 rupees or so, you can look to buy. But I'd not be a buyer above this, beyond this level. So I believe one should look to book profits once it comes around this 950, 965 band. Wait on for some time, see if it is breaking out, and only then probably look to add positions again. Until then, book profits. It's a strong resistance on the upside. Overall chart setup for the long term is positive. Once that 965 breakout comes in, you will see the stock running up towards 1250 odd levels. But until then, it's a little risky to buy in.
Little risky to buy at current levels. That's the call. Rajiv Krishnageet had a query on Bharat Dynamics. Hope this answers your query. Very quickly, one last query on BSC. Abu Bakr Jasim has written in. He wants to know your thoughts on BSC. How should one approach this stock?
Oh, BSC in the past 1 year has, from 1000 levels halved already. It's come to 460 odd levels, and there is no sign of a reversal. So I generally look at reversals very closely as well, and for reversals you need volumes. So there's no sign of reversals at this point of time. So it is likely to move down further. It can come down towards that 400 to 380 band, which is a strong support zone, which is where a lot of volumes had been done in in the 2021 year. So let it come down towards that 400 levels. If we see a pickup in volumes or some consolidation there, that is when you look to add positions. But from the current state, I believe it is going to come down further.
Right, so this wraps up our query segment for today. But before I let you go, Nirav, leave us with some stock recommendation for our viewers.
Yeah, so I have one mid cap and one large cap for today, both buys. We had talked about the IT space, and a lot of stocks are doing very well here. So Intellect is one stock in the last 2.5 years. It has consistently come down, but it has made a very
Please
good
take
bottom.
both the disclaimers, huh?
Yeah, so Intellect has actually moved up from the 400 levels where a lot of volumes were seen. I believe this reversal is in place and it can now very strongly move up towards at least that 500, 550 band and touch the 200-day moving average. It is broken out above that 50-day moving average. So look to buy Intellect at current levels. 448 should be the stop loss and around 500 should be the first target for this stock. The second stock is Bicol and Ultratech. I believe this stock has witnessed a breakout above that 7,300 levels, which has been a strong resistance for this stock for quite some time. Also, a flag kind of a formation breakout has come in. So look to buy this stock at current levels. 70 to 70 should be your stop loss, and this stock can move up towards the 7,700 band. That should be your target.
Well, so those are the stocks that Nirav is recommending for today. With that, Nirav, thanks a lot for taking out time and joining us this morning and sharing your thoughts with us. With that, it's a wrap on this edition of Morning Trade, but don't go anywhere because coming up next is Opening Bell.